The dollar versus Swiss has had an up and down session in trading here today. On the top side, moving averages came into play. I'll talk about the technicals that are driving this currency pair and what to expect going forward. So let's get started. In trading yesterday, the price stretched higher but fell short of the 61.8% retracement of the most recent move to the downside from the September high to the September low. That prompted sharp selling, which took the price back below this swing area. The swing area is defined by a number of different swing lows and swing highs. Most recently through here. It probably goes back in time there and through there as well. But these swing lows and swing highs were broken and remained broken on the rebound back to the upside right through here. That gave the sellers to go ahead to push even lower. In trading here today, we moved down through the 100-hour moving average as well. That should have opened the door for further downside, but instead we did find buyers. Now the rebound back to the upside. Where do we find resistant sellers? And that was against the 200-hour moving average, not once but twice, both in the European and U.S. session. And each of the times the price moved up to that level, we found willing sellers. However, the decline has been fairly modest. As you can see, each time the price moved lower, we did go below the 100-hour moving average. It's blue line in this chart, but then could not maintain the selling pressure. We are currently trading in between these two moving averages, which puts us in this neutral area for this pair as the market tries to figure out which way it wants to go. Dollar lower, dollar higher, Swiss franc higher, swing for Swiss franc lower. That's what's at stake here. But what we do know is that 200-hour moving average did a pretty decent job of holding resistance on these two separate occasions. So if the price is going to go higher, we need to get above that 0.79296 level and stay above that level to increase the bullish bias. If we are able to do that, then we start to look toward things like the 50% retracement and the swing area through here. If we get above the 50% retracement, the door opens up for further upside. On the downside, if we can't get above the 200-hour moving average and we start to trade a little bit more comfortably below the 100-hour moving average, getting below the lows for the day, including the low of this swing area down to 0.79104 would be the next key target. By the way, this area right through here goes back in time all the way through this period right through here to June and July, where we had these swing lows forming this floor through here. We broke below that floor in trading last week after the FOMC rate decision pushed the price at two new lows going back to 2011, as a matter of fact, and then rotated back to the upside. So this area right through here has a long history, and getting below that level and staying below that level would be key. Again, that area comes, if I go back to the hourly chart, between 0.7910 and 0.79 209. So that's my look at the dollar versus Swiss from a technical perspective. Buyers and sellers battling it out, staying below the 200-hour moving average. We'll see how that progresses. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.